how the home price crash in April happened, and what factors contributed to it. The housing market in the U.S. has been experiencing a downward trend since late 2022, when mortgage rates started to rise and demand for homes began to weaken. The pandemic, which had boosted home sales and prices in 2020 and 2021, also faded as a factor supporting the market. By April 2023, the median existing home sales price had declined by 0.9% year-over-year to $375,700, according to the National Association of Realtors, NAR. This was the second consecutive month of annual price declines after a 131-month streak of record increases. Several factors contributed to the home price crash in April. One of them was the tightening of credit conditions by lenders, who became more cautious amid rising inflation, bank sector volatility, weakening economic growth, and an impending recession. The Federal Reserve also raised its key interest rate by 0.25 percentage point on May 3, 2023, signaling that it may pause rate hikes for the rest of the year if inflation continued to fall. This had an indirect impact on long-term home loans, such as 30-year fixed-rate mortgages, which reached 6.43% by the end of April. Another factor was the limited supply of homes for sale, which continued to keep prices high and deter many potential buyers, especially first-time home buyers. The inventory of existing homes for sale was at 2.4 months in March 2023, well below the 6-month level that is considered a balanced market. Many homeowners who bought homes in recent years at record low interest rates were reluctant to sell and lose their cheap financing. Moreover, the cost of building new homes increased due to supply disruptions and rising labor and raw materials costs. A third factor was the changing preferences and expectations of homebuyers and sellers. The pandemic had triggered a shift in demand for larger and more spacious homes in suburban and rural areas, as more people worked from home and sought more outdoor space. However, as vaccination rates increased and pandemic restrictions eased, some buyers returned to urban areas or opted for smaller and more affordable homes. At the same time, some sellers who had unrealistic price expectations or feared losing their equity decided to wait for better market conditions or rent out their properties instead of selling them. These factors combined to create a sluggish housing market recovery that was expected to last for several years. Some experts predicted that home prices would fall by 5% to 20% from peak to trough, depending on the severity of the recession and the level of mortgage rates. Others forecasted that home prices would stabilize or increase modestly by 2024 or 2025, as supply and demand balanced out and economic conditions improved. However, there was no consensus on when the housing market would return to normal or what normal would look like in the post-pandemic era. The home price crash in April 2023 has affected different groups of people in different ways. Let's take a look at how homeowners, renters, buyers, sellers, and investors are coping with the changing market conditions. Homeowners who bought their homes in recent years at record low interest rates may be reluctant to sell, as they would lose their cheap financing and face higher mortgage payments if they move. Some homeowners may also be underwater on their mortgages, meaning they owe more than their homes are worth. This could prevent them from selling or refinancing their loans. Homeowners who have equity in their homes may be able to use it to pay off debt, fund home improvements, or invest in other assets. Renters may benefit from lower home prices, as they could have more options to buy a home that fits their budget and preferences. However, renters may also face challenges, such as tighter lending standards, higher mortgage rates, and limited inventory. Renters who are happy with their current situation may not feel the urgency to buy, especially if they expect home prices to fall further or remain stagnant. Buyers. Buyers may have a rare opportunity to buy a home at a discount, as home prices have fallen by 2.7% in the year to April 2023, the biggest annual decline since. However, buyers may also face fierce competition from other buyers who are looking for bargains, as well as from investors who are snapping up properties for rental income or future appreciation. Buyers may also have to deal with fluctuating mortgage rates, which have increased by 15 basis points in April, reaching 6.43% by the end of the month. Buyers may need to act fast and be flexible with their offers to secure a home in this market. Sellers. Sellers may have a hard time selling their homes in this market, as they may have to lower their asking prices or make concessions to attract buyers. Sellers may also have fewer buyers to choose from, as some potential buyers may be priced out of the market or waiting for better deals. Sellers who need to sell quickly may have to accept lower offers or consider alternative options, such as renting out their homes or selling to an investor. Investors. Investors may see this market as an opportunity to buy low and sell high, as they can take advantage of lower home prices and higher rental demand. Investors may also benefit from tax breaks and depreciation deductions that come with owning rental properties. However, investors may also face risks, such as vacancy rates, maintenance costs, and tenant issues. Investors may also have to compete with other investors who are looking for similar properties and deals.